Hewlett-Packard's new CEO, Leo Apotheker, is trying to turn the Silicon Valley dinosaur into a 21st century animal, but HP shares dropped 6% yesterday. They are down even more in early trading this morning. Kulbinder Garcha says management is taking some bold steps, but it's still too early to get behind this stock. Kulbinder is an analyst at Credit Suisse. He rates HP neutral, and he's here on the InsideTrack this morning. Kulbinder, why too early?
It's too early simply because the enterprise end demand is deteriorating. And on top of that, HP have their own issues. For example, in the services business, they have underinvested historically, and they're raising headcount, so margins are going down. The PC industry is being impacted by the impact of tablets, so that's not growing. And then finally, on top of that, they're not doing enough cost-cutting or restructuring. So just across the board, and then finally, the printing business also has problems in terms of excess inventory. So if you take all that together, the end market is deteriorating so quickly, it's too early to turn positive, and that's why this morning we actually lowered estimates 11% for next year on HP.
So if anything, what Leo Apotheker is doing doesn't sound to me, based on what you're telling me, to be quite transformational enough.
Well, the issue being is that there's not much they can do about the enterprise end demand. The services business is unfortunately a problem he's inherited from the past. It's just been underinvested for the previous 5 years.
And it'll take time to turn that around?
Yes, there's 200,000 people that work in services. You simply can't turn around that kind of business overnight. In fact, they said it's going to take a further 4 to 6 quarters. The issue being is the transformation itself is the kind of bold steps that HP needs to take. The value that unlocks to shareholders will come over several years, not over several quarters.
So when we see the stock price drop as much as it did yesterday and is dropping today, almost 10% this morning, what is that a response to? Is it a response to the fact that that the deal isn't going to turn HP around? I mean, what is it that is in the mind of the investor right now? I
think the first thing is just, as I said, the end deterioration of their fundamentals is so severe. Okay. For a company like HP, to cut a numbers 11% after 1 quarter is actually quite a lot. That's one issue. Second of all, there's some uncertainty around this deal. They haven't confirmed what they're going to do with the PC business yet. How you sell it, how you spin that off, there's some question marks. And finally, if you were to criticize them, they are paying over almost 8 times sales for autonomy, over a 60% premium to yesterday's close. So all those things are the things that people don't like about the deal. The end result is this will begin the transformation of HP, though.
Do you believe there is a buyer for the PC business? I know questions are being raised, but it's a commodity business. Surely there is somebody in China or in the Far East who's interested in...
We actually did think about that last night, and we wrote about it in this morning's note. The issue being is the size of the business is so large. It's a $40 billion revenue business. So the issue being is even if the valuation of it's $12 billion, which is what we think it's worth, who can afford that kind of transaction? Many of the PC vendors in China can't afford that, or in Asia. Maybe Samsung could look at it. It actually might have to be some sort of tax-free distribution to shareholders in terms of a spin-off. That's the way you would separate it.
Let's go back for a moment to Michael Dell.
Yeah.
We talked about that little zinger, suggesting perhaps that HP's PC business ought to be called Compaq again. What does this mean for Dell?
Well, I think over the next 12 to 18 months, you have to say it's a positive, because very simply, the HP business, which has an 18% global PC share, is going to get disrupted. You know, how management incentivize the employees, will products come out on time? That has to be a good thing for all of the competitors. So from a market share point of view, it actually could help Dell. The problem, where it doesn't help Dell, is the end result is the PC industry's ex-growth. In revenue terms, it's not growing. And from that perspective, Dell can't avoid that.
All right, Kulbinder, it's good of you to join us, talk about HP, and give us a little bit of insight into Dell as well. I guess a little extra value for us. Nice to see you this morning. Kulbinder Garcha, he rates HP neutral. He's an analyst at Credit Suisse.